I think we should start. Before we begin, I just want to make a quick announcement that we have recently integrated a couple of new partners. I think the latest and the most uh, recent is the Velodrome that we just posted at Vid that we have integrated them, and uh, I think you should be following our Twitter for more updates about new partners and new protocols that we will be adding in the nearest future. And the reason why we decided to jump on this quick AMA session with all of you guys is the situation with the USDR stablecoin. Just too long, didn't read, as they say. The protocol is safe, and all of our pools are safe except the situation with the high risk pool. And the USDR inside the high risk pool, which is the Thena's USDR, wrapped USDR USDC pool. So we just want to clarify how the protocol is working and what really happened and what should we do in this situation. And we just want to tell that we are looking precisely at things going on with the USDR and tangible DAO. So basically, that's the goal for this AMA session, to discuss it with our product lead, Danil, and our product advisor, Vlad. What happened and what should you do, or should you worry? Like you shouldn't worry because the protocol is safe. We have recently made the second audit with Haken, and we need to say that the protocol is working smoothly. Like as we always say, please do your own research before joining any protocol, including our. So we have our docs published and we have our helping materials. So when you see that the new pool is coming to our protocol, you should always go to the documents and understand what's going on there. So where is liquidity goes and what are the underlying pools and protocols are being used for any specific pool that you see in our app. So we, like full disclosure, we provide our own liquidity. I mean, I do provide our own liquidity, and some of our team members using our protocol for ourselves. So we have been connected with the USDR and high risk pool as well, and we are doing our best to track what's going on and what kind of updates we want to make for our community. So basically, I want to ask our product advisor Vlad about what happened with the USDR and what is basically the USDR. Can you please briefly describe what it is and what happened with them?
Yes, sure. So basically, I want to say from myself, that's a usual story in crypto, especially with some fancy stable coins, which USDR was. Maybe I should say which USDR is, but we will figure it out during this AMA session. So first of all, I want to say that we have three types of stable coins here. The first type of stablecoin is the collateral-based stablecoins, like fiat-based stablecoins. It's like USDT or USDC. Even though USDT is not fully backed by US dollar, it's also backed by some treasury bonds, some assets. It even can be real estate. But on the other hand, the USDC is fully backed by US dollar, so that's the one type of the stable coins. Another type of the stable coins, it's like the first version of DAI, which is over-collateralized stable coins. It means that you put into collateral some ETH and minting less DAI than you put in collateral. So you're creating the debt position. And also it's called CDP, collateral debt position. That's another type of the stable coins. And the final one, which USDR was, is like a fancy stuff. It's also called algorithmic stablecoins, but USDR not so algorithmic. It's the type of the stable coins which can be backed by some algorithm, by some commodities, and they are not over collateralized or not so over collateralized like the second type. And in this particular situation, the USDR was the kind of fancy stable coin which was backed by the real estate, and some portion was backed by DAI. So the treasury of the USDR was with some real assets, like they documented, and DAI. And what happened? Someone take the part from the treasury, and this part was in DAI, and then we see the unpack of USDR. And also we see some questions inside of the chat of the stablecoin. People asking like, is the real estate is real or not? But this the question. In the result, we have the half price of the stablecoin, so it's unpegged for now, and it was a really fancy stablecoin, and the team works with dexes like Tena, Velodrome, so the bribes dexes, and they are put incentivization on pools with USDR and other assets, other stablecoins, and you had a chance to earn up to 20% APR on the stablecoins, which is very, very risky in this type of market with this type of stablecoin. But this is a really high reward with compared to the other players on the market. So to make a conclusion, what happened? We see that the part of the treasury was gone, and due of that, the stablecoin lose their price. So that's it.
Okay, thank you. So basically, one of our pools, which is the high risk pool, provided liquidity to the TANAS, wrapped USDR, USDC, and the USDR unpegged due to someone took the DAI right from the USDR's collateral. Is it right?
Yeah. So we have to explain it simply. We have the project lose the collateral, and the stable lose the price. So
Yeah.
they are interconnected.
Yes. So basically, when you go to the app.leechprotocol.com, you can find the high risk pool, and at this point, you cannot deposit any liquidity, provide any liquidity to this high risk pool, because we decided to stop all deposits before the situation is gonna be clear, right? And when you see the APRs in our app, part of the APRs are being incentivized by our own incentivization epoch, which is the third one. And another part of the APR is basically the APR that provides by one of our partners. And with the USDR, it was the TINA's, right, wrap USDR, USDC pool. So we are the aggregator, and we just get the yields out of the market. You need to understand that. In case of any doubts or questions, you can go to the docs, or you can basically chat with us in our Telegram. But as I repeated and I stated, it's better to go to our docs first to understand what's going on. So, what were the immediate actions that we took from our point? Maybe Danil, you can share something.
Yeah, actually, as you mentioned, we stopped deposits for high risk pool, and we informed our community through official channels. Actually, this situation affected only high risk mixed pool. All other pools, low risk, medium risk, simple pools, not affected, not damaged by this situation, because all of these pools are not related to USDR at all. So our actions here was related to high-risk mixed pool only. So we stopped deposits and informed our community about the pack.
Yeah, so basically, if you need any help with the USDR related pool, please go to our Discord and open the ticket so we can support you and provide you any necessary materials or information. So our position at this point regarding the high risks USDR Stannis pool is that we are closely monitoring what the tangible DAO is going to announce. And they have already announced the program to get funds back through the sales of the real assets that they got on their balance. And we will be closely monitoring what's going on there. And we will announce you through your ticket what is happening with the liquidity. And please go and open.
This space was downloaded via spacesdown.com. Visit to download your spaces today.
The Discord ticket, anyone who provided liquidity to the high risk pool, and we can support you on a one-on-one in our community's Discord. And I think we need to say that we have a plan. I mean, that was always the plan, but we wanted to highlight what's gonna be happening with the mixed pools in the nearest future, so we can lower the risk of such situations, right? Danil, can you share us what's gonna be the product plan for our mixed pools?
Sure. So right now, our mixed pool contains only one pools, but in the nearest release, it will be very soon. We will launch a new version of mixed pools, and we aim to diversify liquidity across 5 or 10 different pools based on risk level. And as you can see, our risk management system is working correctly. We correctly identified the risk level of USDR pool. And currently the losses of from this situation for USDR pool is about 50%, but in the future, after the following release, the losses from the similar situation may be about 5% due to high level of diversification of liquidity inside the mixed pools. Yeah,
So
also I want to say, yeah, please.
No, I just wanted for you to maybe to clarify how it's gonna work, like more
Yeah.
in detail.
Yeah, as I mentioned, we plan to split liquidity across 5 to 10 different pools. And for example, let's say that we have mixed pools with 10 different pools with a similar risk level, but at the same time, one pool will work with USDR, another pool will work with MAI, for example, another pool will work with some another asset. And due to that, in the similar situations, when, for example, USDR DPEG, it will not affect other pools in the mixed pool. And in this situation, we have only 10% of liquidity in this exact pool, in USDR, USDC, for example. And even if this pool will lose 50% of TVL, our total loss will not be more than 5% due to the only 10% was in this exact pool. And also, I want to mention about our future plans. We are actively working on monitoring system. It will be something like risk handling automatic system, which monitor anomalous activity, DPEG, rug pool protection, and other things. And our idea is to monitor all transactions related to integrated protocols, pools, and assets. And as a result, we'll be able to withdraw all liquidity from pools which was affected by, I don't know, hackers or DPEG or something like that. and swap this into the USDC or USDT. As a result, we will be able to protect our liquidity from situations like that and withdraw money before the pack lose money of this from this pool. Yeah.
So by saying withdraw, you mean that the liquidity is gonna be automatically relocated to another pools to get the yields, right?
Yeah.
Mm-hmm. Okay, sounds really good. Sounds really interesting. I think this is the core of the easy DeFi model that we have with our protocol. So we want to simplify the access to the DeFi for everyone who is not aware or who is kind of newbie in the DeFi, in the decentralized finance world, by providing them a one-click or just few clicks app that can get the yields out of the major layer ones and layer twos and major dexes, some money markets like lending and borrowing in just in one easy to understand and one easy to use interface. This is what kind of product we are building at the moment. And right now we are in the third stage of launch. We have just made the second security audit and everything works as it should. And right now we have the third incentivization epoch. You can take a look at our app.leechprotocol.com. What kind of the incentives we got at this point, and we have a limit for the whole protocol at this point, just 1 million, and the limit for the wallet is 30K, right? So that's basically that we wanted to share, like TLDR. We are monitoring what's going on with the USDR, and if you have been affected by this USDR situation, just open the ticket in our Discord and we will try to guide you and provide you all necessary materials. I think we'll have some action plan maybe in a week or two based on what's going to happen with the tangible DAO and the USDR. And in a nutshell, everything else is working smoothly. You may join any of our pools at the moment, and as I wanted just to repeat, go to the docs, LeechProtocol.com, and go to the help section in our app to understand what kind of pools, what kind of underlying assets we use at the moment, and why we put those assets to those risk levels. High risk, medium risk, low risk, or just a simple pools, right? It doesn't have any risks associated. So anything else? Maybe we got some people joining us. Maybe anyone got a question at this point, or is there anything we need to cover that we probably forgot to cover, guys? What do you think?
Yeah, I wanna say from myself that's the regular situation in crypto, and if you take any other yield aggregator, simple one like Beefy or even some Arrakis Finance or Gamma Swap and the Leech Protocol, we need to think about the security of the pools and the strategies, but we are interconnected with the other protocols like USDR, because even for ourselves, like for the users, we want to provide the best possible yield opportunities on the market, and that means that we, like users, taking the risk by that's possible opportunities and the highest yields, and to suggest the next actions for the people who was affected, because I also was affected a bit in this pool. First of all, diversify your assets between other protocols. Check the documentation of all the protocols and do your own research regarding the farm opportunities, and save some BTC on non-custodial wallet, because the real one major thing that you should do, and this is not like a financial advice, this is not only like about the financial stuff. You should be in the game as much as possible. I mean the game, the crypto, you should be in crypto as much as possible. Why? Because during this time you will receive a lot of opportunities, and that means that you should have some assets as long as possible during the bear market, during the bull market, during some exploits, during some hacks. This is the major thing, because if you lose all your assets mentally, you will fuck the crypto. You will say for yourself like, okay, that's not for me. I lose everything. And to avoid this situation, just diversify the assets between the protocols, and save some BTC on non-custodial wallet, save some stable coins. That's fully part of the crypto portfolio. That's not only about the farming. In total, that's about the long and happy life in crypto.
I also want to add one thing. I believe you saw our general mixed pool, which will come in soon on our website. And the idea of this will be in diversifying your liquidity between different risk levels. For example, right now we have high risk, low risk, and medium risk. And general mixed pool will split your liquidity between these three mixed pools, something like 80% or 70% in low risk, 20% in medium risk, and 10% in high risk mixed pool. So I absolutely agree with Vlad about diversifying, and it's so important to split your own liquidity between different pools, different assets. You shouldn't invest in high risk, for example, only. It's the same thing with low risk, because if you want to optimize your profit, you should split liquidity in the smart way. And yeah, I hope I know that Leech Protocol will help you with that in the nearest future with our new release. So that's it from my side. Thank you.
Yeah.
Thank you, guys. Thank you for joining. Stay close to our social medias for new updates, product updates, and USDR related updates. Of course, we will publish all the information about our incentivization epoch as well in our Twitter, in our Telegram, and in our Discord. I think that's all. We will publish some blog content based on this AMA session with what happened and what you should be expecting next. Thank you for joining. Thank you for your time. In case of any questions, just go to our Discord and open the ticket. Thank you very much.
Thank you. Bye.
Thanks.